The world of aviation often moves at the speed of sound, with planes crisscrossing the globe and airports bustling with life. Every day, thousands of flights take off and land, connecting people, cultures, and economies in a seamless dance above the clouds. But sometimes, the most significant moments in this industry are marked not by noise, but by a sudden, deafening silence, a pause that signals something monumental is unfolding behind the scenes. For months, the entire aviation sector has been holding its breath, watching as Boeing, one of its giants, navigates a storm of intense scrutiny, operational setbacks, and mounting public pressure. But today, August 22nd, 2025, that quiet tension was shattered in a way few could have predicted. Three of the world's most respected airlines, Emirates, KLM, and Qantas, issued a rare, coordinated statement that sent shockwaves through the industry and beyond. Emirates, KLM, and Qantas represent three continents, three distinct business models, and millions of passengers. Yet today, they spoke with one voice, united in purpose and resolve. Their collective message was not just a business decision, it was a verdict, a clear signal that patience has limits, even for industry titans. Boeing has worked tirelessly to restore confidence after a series of setbacks, investing billions in quality control, transparency, and rebuilding trust with its partners and the flying public. Many believed that a recovery was finally underway, that the worst was behind them. But this announcement makes it clear. Key customers remain unconvinced, and doubts still linger. The news broke through simultaneous press releases, meticulously timed for maximum global impact, ensuring the world was watching as the story unfolded. It was a calculated expression of lost patience, not an emotional outburst, a strategic move designed to force change and demand accountability. The implications are vast, rippling through Boeing, Airbus, suppliers, leasing firms, investors, and travelers worldwide. Every link in the aviation chain now faces uncertainty. The industry is left asking, what happens now? Will this spark a new era of reform or deepen the crisis? The silence is over. Now the reckoning begins. The world is watching, and the next moves will shape the future of flight. The heart of the announcement was a rare joint declaration. Emirates, KLM, and Qantas are pausing and diversifying future Boeing fleet commitments. For the first time in recent memory, these global giants are presenting a united front, signaling a major shift in the aviation industry's relationship with one of its most iconic manufacturers. This isn't a cancellation, but a clear signal. They're hitting the brakes on billions in future orders and actively exploring alternatives. The move is calculated, not reactionary, and it sends a powerful message to both the market and Boeing's leadership. The airlines cited persistent production delays, ongoing quality concerns, and demanded renewed assurances on quality control. They emphasized that repeated setbacks have eroded confidence and that the time for waiting is over. Existing orders remain in place, but future options, especially for the highly anticipated 777X and next-generation narrow bodies, are now frozen. This pause affects not just timelines, but the strategic planning of each airline's future fleet. For Emirates, dozens of 777X are affected. For KLM and Qantas, both long-haul and domestic renewal plans are on indefinite hold. The ripple effects will be felt across their global networks, impacting route planning and capacity growth. The financial hit to Boeing is immediate, with billions at stake, but the reputational blow is even deeper. Investors and analysts are already questioning Boeing's ability to recover from this setback. The airlines framed this as a duty to shareholders and customers, not a punishment. Their message is clear. They must protect their own standards and reputations, even if it means challenging a long-standing partner. Their statement, "Our commitment to safety, reliability, and punctuality is absolute," underscores that passenger trust and operational excellence remain their top priorities. The responsibility now lies with Boeing to restore trust, rebuild relationships, and prove that it can deliver on its promises. Most strikingly, all three carriers are entering advanced talks with other manufacturers, including Airbus. This signals a willingness to diversify fleets and reduce reliance on a single supplier. This is a direct threat to Boeing's market share and a declaration that loyalty is conditional, not guaranteed. The competitive landscape is shifting, and Boeing must act quickly to respond. The message, patience has run out. the world is watching to see what Boeing will do next. For Emirates, the world's largest long-haul carrier, this move is nothing short of seismic. The airline has long been a symbol of ambition and innovation in the Middle East, connecting continents and setting new standards for global travel. Its vast global network relies on a fleet of large Boeing and Airbus jets, each one a crucial link in its worldwide operations. At the heart of this fleet is the 777 family, the backbone of Emirates' long-haul strategy and a familiar sight at airports around the world. But repeated delays to the highly anticipated 777X have thrown Emirates' growth plans and strategic forecasts into disarray, forcing the airline to rethink its future. Without firm delivery dates, Emirates cannot sell tickets or plan new routes, leaving revenue and expansion opportunities on hold. The decision to pause is a clear and public message. Uncertainty from Boeing has become a business risk that Emirates can no longer afford to ignore. By taking this public step, Emirates gains leverage at the negotiating table. Boeing must now offer major concessions and guarantees to win back the airline's trust and business. Meanwhile, Airbus is now firmly in play for future wide-body orders, giving Emirates more options and bargaining power than ever before. As a mega customer, Emirates is using its status to force both manufacturers' hands, demanding reliability, innovation, and accountability. Beyond the logistics and numbers, this is about reputation. Emirates' brand is built on flying the newest, safest, and most advanced aircraft in the skies. By distancing itself from Boeing's troubles, Emirates is reasserting control over its narrative and protecting its image as a leader in global aviation. Through it all, Emirates' standards remain unwavering, even if it means making tough, high-stakes choices to secure its future and maintain its world-class reputation. KLM, with over a century of reliability, rarely makes public waves, so its participation is telling. The Dutch carrier's culture of precision can't tolerate ongoing uncertainty from Boeing. KLM's long-haul fleet renewal, crucial for sustainability and competitiveness, is now disrupted. This move signals a possible tilt toward Airbus, strengthening European ties. For KLM, it's not about patriotism, but pragmatism. Trust and delivery matter most. The joint statement is a formal call for Boeing to rebuild confidence, not just fix production. For KLM, private talks failed. Public action was necessary. Trust, once lost, is hard to regain. Qantas, famed for its safety record, joining this statement is a powerful indictment. The airline's identity is built on trust and engineering integrity. Qantas has long been a Boeing loyalist, but this pause throws future plans into uncertainty. It especially impacts Qantas's ambitions for ultra-long-haul travel and fleet renewal. The airline's remote location means reliability is non-negotiable. By joining Emirates and KLM, Qantas leverages collective power to demand higher standards. Loyalty will not override the need for certainty and quality. Qantas is managing its own reputation, making clear it holds suppliers to its own high standards. The message, the spirit of Australia demands excellence, and will change course to find it. Boeing must now prove it can meet Qantas's exacting expectations. The tri-airline announcement triggered a storm at Boeing and on Wall Street. Boeing's stock plunged, reflecting fears about its future order book. The move sets a precedent. If these airlines are speaking out, others may follow. Internally, Boeing's leadership faces intense scrutiny and urgent demands for action. Words won't suffice. Airlines want concrete, verifiable results. The shockwaves hit Boeing's vast supply chain, threatening jobs and operations worldwide. Supplier uncertainty could ripple through the entire aerospace ecosystem. Boeing's reputation as an employer and innovator is also at risk. To recover, Boeing must fix production and restore its culture of engineering excellence. The future of American aviation leadership is on the line. The market's reaction was swift. Boeing's loss became Airbus's gain. Airbus shares surged as investors bet on new orders from the three airlines. Airbus sales teams are now courting these carriers with their latest jets. Aircraft lessors, who finance much of the world's fleet, are rethinking Boeing investments. Other airlines may use this moment to negotiate better terms or delay orders. The collective action arms every Boeing customer with new leverage. The duopoly's balance is at risk. Prolonged Boeing weakness could hurt the whole industry. Less competition means higher prices and slower innovation. While Airbus may celebrate, the industry needs Boeing strong for healthy competition. The hope. This shock spurs Boeing to resolve its issues and return as a reliable rival. For travelers, these boardroom battles have real consequences. New aircraft mean new routes, more flights, and better in-flight experiences. Delays in deliveries mean fewer options and older planes on existing routes. Passengers may wait longer for quieter cabins, bigger windows, and upgraded seats. The airline's public stance is a commitment to safety and quality for their customers. No unsafe aircraft will fly, but public disputes can create unease. Travelers can take comfort. These airlines are holding manufacturers to the highest standards. In the long run, this shakeup could drive better engineering and innovation. Increased competition means more advanced, efficient planes for everyone. Short-term disruptions may lead to a stronger, more resilient industry. Ultimately, flyers benefit from airlines demanding the best. This coordinated move is a watershed moment, shifting power from manufacturers to airlines. For decades, Boeing and Airbus held the cards. Now, customers are fighting back. This precedent could force greater transparency and accountability from manufacturers. For Boeing, it's a painful but necessary inflection point. Rebuilding trust will require deep cultural change and a renewed focus on quality. If Boeing succeeds, it could emerge stronger. If not, its market position may erode. The industry map may be redrawn, with airlines aligning more closely with one manufacturer. The domino effect could fundamentally alter the duopoly. August 22, 2025 will be remembered as the day customers demanded change. The coming months will reveal if Boeing can chart a new, stable course. The world is watching, investors, engineers, and every passenger who looks to the skies.